Hello, and thank you for joining us. I'm Mike Carter-Kaneen in for Bruce today. Well, a week after his inauguration, President Donald Trump has hit the ground running, signing several executive orders from health care to border protection. But tax reform is a big issue that will require legislative action. So what will reform mean for taxpayers? Joining us today, Mike Davidoff, a certified public accountant practicing here in Alexandria. Thanks for being here.
I'm glad to be here, Mike.
So you help individuals as well as small to medium-sized business owners look at their tax and financial profiles. What would you say is the number one question you're getting right now as this idea of tax reform is on the horizon? What are people most concerned about? What's the question they're asking?
Well, obviously, people are concerned about whether their taxes will go up, stay the same, or go down. That's on everyone's mind.
And you've done extensive research into this proposal that kind of developed as the Trump campaign continued over the last several months. How would you sum up what this means for most taxpayers?
Well, the proposed reform, and I want to emphasize it's still proposed because it's not been enacted yet, and there could be some changes down the road. But in its current form, the proposed reform is actually designed to primarily lower the tax burden on the majority of taxpayers in some way. But it's not going to be distributed evenly. Most of the tax burden will be relieved for higher income taxpayers and business owners.
It's going to reduce the number of tax brackets from 7 currently to just 3.
Yes, and that's a major part of that proposal. And the second part of this proposal is that business owners will get a huge break, which I will be talking about a little bit later on. And the third one is a simplification of the tax code.
And how exactly would this tax reform affect individual taxpayers versus business owners? Is there more benefit going to the corporate American business owners, or is it more to individual families and taxpayers?
As I said, some benefit will be spread over in a certain fashion, unfortunately unevenly, because, as I said, the higher income taxpayers will benefit the most. But it's not to say that the lower income households will not benefit at all. They will benefit. It's just going to be, the impact's going to be much less. So
let's take a look at the chart that kind of visualizes what this looks like across the strata. You see that the yellow indicates no change, and then the blue indicates a decrease, and a pink indicates an increase in your tax payment.
Absolutely correct. And as you can see, for the majority of the current tax brackets, the direction of the arrow is down, not up, but for some, it's up. And I can tell you that the biggest impact for the taxes to increase will be felt among single taxpayers in a tax bracket that are currently in a 28% tax bracket that will go up to 33% tax bracket.
So on average, the proposed plan would cut the average tax bill in 2017 by almost $3,000. That's a lot of money for many families. But as you noted there are some in the middle class, particularly single parents, who would potentially pay thousands more?
That is correct. However, there are also some provisions in the tax code that may actually lessen the impact of that increase. So, for example, child and dependent care expenses. There is a new deduction in the works that may potentially lessen the impact of that increase. We don't have the details of this deduction just yet, but it's in the works.
So that assumes that I have children who are in daycare or in some type of care service that qualifies for that exemption. If I already have children who are in high school, say, then that won't benefit me.
Yeah, exactly. Mostly will not benefit those who have children in a middle to high school, unless you have summer camps. But that's usually very little.
And you also note that in the DC metro area in particular, that these income ranges are pretty common. I mean, the cost of living here pretty much requires that you make that level of income. So this could have real impact on many of our viewers watching now.
Absolutely, yes. It's very common, and I see a lot of single parents and just single individuals who are just recently out of college and they already have income in those tax brackets.
And we did see, we should note during the campaign that there was some pushback, not just by Democrats, but some Republicans who noted that that was a discrepancy for some in the middle class, these single filers who that perhaps as you noted, this is a proposal. It could change as the negotiations continue on Capitol Hill. Let's also talk about the exemptions that this plan would eliminate. What are they?
So we're talking about personal exemptions. So currently, each taxpayer in a household, or each member of the household, rather, gets a little over $4,000 in personal exemptions, which is essentially, it's a free deduction given by the government. Well, those will be eliminated as well as a part of that proposal, but they will be instead replaced by a much higher standard deduction. So the talk is that the standard deduction will rise to $30,000 for married taxpayers. And then for what that will mean for the majority of the taxpayers, the need to itemize the deductions will probably be eliminated. In my estimate, 60% of taxpayers will probably not need to itemize the deductions because they will simply not have enough of the expenses to justify itemizing the deduction. So they will be incentivized to take the standard deduction instead, the $30,000, and that will be a simplification of their filing. So they don't have to do the record keeping, they don't have to keep track of many of their various types of deductions, they don't have to save receipts. So in that way, it will be definitely simpler to file the taxes.
I mean, for many people, frankly, the idea of hiring a CPA such as yourself, that's time and money.
Exactly.
That this proposal, if it does simplify this process, it could appeal to many taxpayers. It would make it much easier just to put in the paperwork and feel like you've paid your fair share and you can move on rather than saving all these receipts. But yes, obviously people who work the system benefit from those exemptions, and I wonder how much resistance there will be from those who benefit from those exemptions. I mean, are you hearing from clients who say that they are concerned that they're going to lose money because of this?
So far, I have not heard about this, but I could envision that people who have a number of children, because each child, remember, gets an exemption of a little over $4,000 right now. So multi-children families will probably be those who would not like it that much.
Let's talk about the business proposals under this plan. The major change is the reduction of the corporate rate to 15%. How does that compare to what we have currently?
Well, it's actually a great plan, because what will happen is, number one, the corporate rate will be reduced to 15%, especially for pass-through entities. Pass-through entities are sole proprietorships, S corporations and partnerships. So they can elect to be taxed at 15% flat rate instead of passing the income to their individual returns and then be taxed at their individual rates, even the new rates. You know, if it's 33%, it's still a top rate. So compare 33% to 15%. You know, the answer is very clear. 15% is much better rate. So that may potentially result in a lot of people trying to become contractors to their employers instead of being an employees, which means that they will now have to take care of their own health insurance, that they have to take care of any other benefits. So that will change. It will be a tectonic change. It will be a dramatic change that will change the way how the employers and their employees interact.
So overall, would you say this reform, while everyone, except for, as we noted, those single filers, will see an increase in the money that they're keeping or a decrease in their tax payout, the high-end earners and businesses will be definitely seeing the biggest payout?
Absolutely. I totally agree with that. And I think the thinking behind that is that these are the people and the entities who may be in a position to start spending this money that they saved from taxes and stimulate the economy. But again, this is just in theory. You know, we don't know how it's going to go. Some people are known to be great savers and not great spenders. So we expect some of the taxpayers to actually start saving this money, which will still go into the economy in the form of their investments into stocks, mutual funds, and bonds. which will then obviously benefit the companies who issue the securities.
As you know, progressives are skeptical of what they call trickle-down economics.
Exactly.
And we could see some pushback on the exact rates here. So in terms of that, as you mentioned, this is just a proposal. There are a lot of other issues out there that the Trump administration is trying to tackle in these first few days of the administration. Do you feel optimistic that this is the year for tax reform?
Yes, I think the tax reform is long overdue. Again, we don't know at this point in what version this reform will pass in the Congress. I think that at least 60 to 70% of those proposals will probably be adopted, but the remaining 30 may either be turned down, at least for now, or some of the new proposals that are unknown at this point may be added to it. And of course, we're going to continue monitoring this field to see what else is out there.
And not just some progressives on Capitol Hill. There's a disagreement within the Republican Party about whether or not this should be revenue neutral and how if there should be offsetting of this plan, which is said to cost millions of dollars. A number of Trump advisors have been questioning whether this tax reform needs to be revenue neutral. So we'll have to watch and see. But we appreciate the insight on what this current proposal could mean for taxpayers, especially here in the D.C. region. Mike David-Ott, a certified public accountant, thank you for your time. And we'll take a quick break right now, but we're back with more News Talk right after this.